All right. Hello, everybody. Happy Father's Day to all you fathers out there. Welcome to the Multifamily Freedom Chasers Financing Zoom. I want to thank you guys for joining us tonight. If this is your first time, just let us know in the chat. Put a 1. All right, Mark, welcome. Thanks for joining. Ooh, another Mark, 2 marks. Thank you guys for joining. I want to also let you guys know that this Zoom is not just for education, it's for connecting with each other. So Mark and Mark, if you guys put your information in the chat, I mean, you don't have to do it now, but throughout the Zoom call and connect with people, that would be great. There's a lot of people that connect with each other on here. And JJ, I don't know if you have the link to the Zoom call, sorry, the Facebook page. You can also let them know. How many of you have never been on a Freedom Chasers Zoom before? Not just the financing Zoom, but a Freedom Chaser Zoom. There's many. There's the debt Zoom, there's the underwriting Zoom, there's the activation Zoom. So everybody's been on a, okay, cool, awesome. All right, Jerry, I'm just gonna have you take it away from here.
All righty. I will do that. And I will take share screen.
Hi, Aldo.
Can everybody see my screen now? All right, great. So I am Shelley Miles. That was just talking. I don't think she introduced herself. She is Shelly. That's my wife. You're muted or something there because you're not.
My bad. I will do that. Ryan. My name is Shelley Miles. I am a commercial mortgage broker with Adventure Commercial Capital and a co-founder of Adventure Commercial Capital. And Jerry is the other half of that. So there you go.
All right, great. All right. So today's agenda, we'll be going through the community ecosystem. We'll introduce ourselves a little bit more, and we'll give everybody a chance to introduce themselves, or a few of you a chance. We'll talk a little bit about the current debt market with a debt market update. And then we'll go into the main topic, which is what needed to fund your multifamily deals. And then we'll do a question and answer at the end. So we'll try to keep it to an hour. Usually we're an hour to an hour and 10 minutes. So we'll try to keep it to that. And if you hear noise in the background, we have a house full of family that is in town right now. So the house, it could get loud here behind us, but we've got a lot of them outside. So hopefully it's quiet here while we're on the Zoom. So, but just a fair warning to everybody. So first things first here. The multifamily Freedom Chasers community looks like she had asked if any of you guys have been on any of the Freedom Chasers calls, and I'm thinking most of you had, so you guys have seen this before. Something new to keep in mind on these is every one of them are now at 8 p.m. So Sunday to Wednesday every week we got a Zoom call. And on the weeks that we don't have them live, we have the YouTube channel up, and you can always join on there and continue education. And, sometimes doing things in repeat, you'll pick things up that you didn't hear the first time. So Sundays we got the 3 Freedom Boys, Victor, Trevor, and Marcel. And always have a great speaker on Sunday nights. A great way to start the week and to finish the weekend is on that Sunday night Zoom. Get you ready and in the mindset to kill it through the week. Mondays, we got broker talks with Pete and Ed. Those are good calls, and Pete is on there and trying to get people out of their shells. A lot of people are afraid to make that first call to the brokers and to talk and to get information. And that's the first step. And he does a good job of walking you through those calls and the things that you should say and shouldn't say. Once you find a deal, you got a broker that you're dealing with on Tuesdays. You have napkin underwriting with Aldo, Will, and Ed, and Aldo's on here currently. So that's a good call. I was on there last night, and always have a lot of good information. And then you have us on every other Wednesday. You have us, and then on alternating Wednesdays you have Victor, and he does advanced underwriting. So he goes into a lot of real technical stuff. So a lot of education here. And the coolest part of it is it's all free. So we've spent a lot of money on education ourselves in different groups. We've know of some and have paid for some that were $40,000 a year for education and really no more information than what you get on here for free. So
Yeah.
they'll take
And
advantage of it and use it. So
yeah, and JJ just shared the Freedom Chasers Facebook link. If you haven't joined that yet, you can go ahead and click on that link and join the Facebook group, and you will have reminders on all of these calls every week. So there you go.
yeah. All right. So who are the Miles? You have three of us on the call here right now. Me and my wife Shelly, and JJ is on here. We have two other boys, Jordan and Riley. I don't think Riley's on here tonight, and Jordan's out in the yard playing basketball right now. So, but we have actually we started Adventure Commercial Capital about 3 years ago. We have been in the construction business, doing primarily commercial roofing for the last 20 years. And started quite a few years ago investing in real estate, buying single family houses, some duplexes and things like that. Finding funding was always the issue. We being self-employed, the banks didn't like us. And then when we started calling around to, the independent brokers, those guys, we had some of them that just were not real honest, and were overcharging us and not treating us real well. So about 5 or 6 years ago, I told my wife, I said, that business that these guys are in, I said, I think that we could do a better job than these guys are. We got to make the connections and we got to do the legwork. But I think we could treat people fairly and make a nice business of the commercial mortgage brokerage. And we ended up finding a training group that put us in touch with all the lenders. We went through an educational process, and here we are 3 years later. We're in business, and took me a few years to get her on board with the idea, but now since we started 3 years later, here we are, and business is good. Slow right now because of the market, but we're rolling on and paying our bills. So life is good, and we're here to help others that are in the same situation that we were, and just looking to help real estate investors grow their portfolios. So next, Shelly is my wife there. She talks really good on here and does really well, but I'll tell you guys, she does not like to speak in front of people. She's very shy in that respect, but she is coming out of her shell, and she's going to be on ladies' night. Do you have the link for that, JJ, to put it in the chat?
I just shared it.
Okay. So she will be telling her story on ladies' night. There are men on the call as well, so feel free to join the call and hear Shelly on June 22nd. Is that a Thursday?
Yes.
Okay, so Freedom Chasers don't have a call that night, but she'll be on there and telling her story, where she came from, coming from the islands and all all the rest, and having to be married to me for now. I guess this month it'll be 18 years. So
Sunday on Father's Day,
yeah,
18.
yeah. So thanks for the reminder.
You're the one that always have to remind me, so.
So y'all check her out on that call. Here is our contact info. Anybody needs to get a hold of us, you have a deal that you want us to look at, just anything. Our contact info is here. That's my cell phone number, and then our email addresses. So. So take a picture, screenshot, whatever you want to do there with that. Keep it up there for about 5 more seconds. So I'm going to give you guys a chance to tell us who you are. Raise your hands or unmute yourself and tell us. It'll take about a minute. Tell us where you're from, what kind of real estate you do, or what you want to do.
Yeah, don't be shy. Just raise your hand and come up and speak.
And don't be shy. I will tell you guys that these calls, there have been people connected on these calls that have done business together because they've met each other on these calls. So don't be shy. Make sure you get your name out there and your face out there. So I got 2 people with raised hands. I see you up there first, Mark. Go ahead.
Okay. There's always got to be a first. So
Yep.
I'll be that first. Yeah, thanks for putting this on. It's really helpful for someone who's invested in real estate, commercial real estate, just from a limited partner standpoint. I'm invested in Cardone Capital, and I'm looking to start doing deals on my own. So thank you for putting this together. I really appreciate that. And for me, I'm a business owner here in Los Angeles. We are home technology professionals, which is kind of a fancy way to say low voltage contractors. So we do all the home audio, video, and security stuff. So I am looking to pivot and create cash flow and freedom from having to run a business, or actually the business runs me. So
Yeah,
that is where I'm at.
gotcha, man. Well, good to have you here.
Thank you.
Glad to have you here, Mark. So you know Grant Cardone. We're part of Grant Cardone's real estate club.
Oh, cool. Yeah,
Yeah.
I'm a 10X business coach. So I'm one of
Nice.
the licensees. And so I've gone through Cardone Ventures, which I'm doing their business side of things to grow and scale. And yeah, so that's great.
Wow, that's awesome. Glad to have you.
Thank you.
All right, Tiffany. How are you?
Hi. Can you guys hear me okay?
Yes.
Okay, awesome. Well, I am just very excited to be here. I have been trying for a really long time to make it on Wednesdays, but it's difficult with having kids and extracurricular activities. So I'm very happy to be here. But I guess I'm technically not, I won't say I'm new anymore. However, I just finished I'm a PA by career, and I practice medicine, but I'm looking at some point in the future transitioning from medicine into multifamily real estate, as well as a little bit of single family here and there for midterm rentals. I just completed not too long ago the mentorship with Carlos Salguero's OCS3 Investments, and looking forward to getting my first property on my own, basically. And so I'm looking anywhere between like 4 and 30 units to get. I'm looking for team members, so those that are really good with underwriting or just being integrators, as I am a visionary and I love connecting with people. Yeah, so I just, super happy to be here and to be able to hear you guys and kind of get an understanding from the financing side a little bit more, just to see what's available. So thank you for having me. I appreciate it.
Great to have you on here.
Awesome.
Thank
Glad
you.
to have you, Tiffany.
Thank you. Oh, and happy anniversary to you too soon.
Yeah,
Thank
thank
you.
you.
You're welcome.
Miguel, good to see you.
Hey, nice seeing you, Jerry. It's been a while.
Yeah.
So yeah, Jerry and I actually we live here in Kentucky, not too far away from each other. So we've met a couple times, grabbed some coffee. But a little bit about myself. I'm here in North Kentucky. Just switched over from my W-2, actually going all in on real estate. Right now, really focus on more of the creative route. So those who are familiar with subject to seller finance, looking at property pre-foreclosures, I'm doing that a little bit right now. Just because of the entry fee, right? A little bit cheaper than putting down 25% down on a property. But the future goal is to get into larger units. Obviously, more cash flow. And then once you have enough cash flow, better maintain it, right? So got that going on, and also just starting a couple of business here locally in the area. I'm an agent, forced to go with the real estate and looking at some flipping opportunities too. So I flip homes as well. So a little bit of myself. If you guys need anything here in Northern Kentucky or looking to invest, give me a shout and I can help you out. So,
Awesome, Miguel.
thank
Good
you.
to see you here.
Glad to have you,
Yeah,
Miguel.
and when he says Northern Kentucky, guys, we're like 15 minutes outside of downtown Cincinnati here.
Yeah.
So we're the Cincinnati market, really. So.
Yep.
All right, Mark.
Glad to have you.
Hello, everybody.
How's it going, Mark?
Well, I'm Mark, and this is my wife, Nancy. We're
Hi, guys.
we're pretty new to the multifamily the field exactly. We joined the Multifamily Mindset Network about a month and a half ago, so we're going through all the foundational courses and everything like that. And so we found you guys through some people that finished their year, and they suggested that we go to you guys. So this has been very informational.
Awesome.
Mhm.
Awesome. Good to have you guys.
Okay, yeah, we know the multifamily mindset
Yeah.
group. We know some people from there.
Sure.
Anybody you said
It was
somebody recommended
it was
you?
Anna that brought us over.
Rosa.
Oh, Rosa.
Yeah, I know Rosa.
Yeah,
I think we've
uh-huh.
had a Zoom call with her. Yeah,
Yeah.
awesome. And Elise is on here too. I see she just joined. I don't know if you know
She's-
Elise. She's in the multifamily mindset as well.
Oh, okay.
Awesome. Glad to have you guys. Glad to meet you. Glad to meet you, Miguel.
That's a pretty baby you guys got.
Yeah. Awesome.
Thank you. This is Leo. This is our Y.
Yeah.
Awesome. Yeah, there you
Mhm.
go.
Awesome. Well, I'm glad to have y'all here. It's a good turnout tonight, really. 26 people on a nice summer evening. That's a good turnout. So glad to have everybody here. We'll get into the topic. The big question that everybody's got, and if you turn on any of the Bloomberg or CNBC and all these places, the big question is, when is the Fed going to lower rates? And that I don't know how many of you guys were watching today and saw Jerome Powell speak, but they held the rates today. We're still in the 5 to 5.25 range for the federal rates. He paused this time around. I think they said first time in 12 months or 15 months. I don't know how many months now, but anyway, he paused. But they're saying that they're going to have 2 more hikes here this year, and that we could be to 5.6. Some people are saying we could get to 6. For the federal funds rate, by the end of the year. I'm going to go out on a limb here and say nobody really knows. These guys in the Federal Reserve, Jerome Powell and them, they might know what they're going to do. And kind of one problem that I see right now as a real estate investor, it might not be a problem for the market overall, because it's good for the market to have downturns. You can't, just have an upturn forever. And this is kind of a good time for a downturn, I guess. And then, you get a chance to buy, and then, we have a good downturn, and then we're going to have a good upturn again. But I will say, something that I heard on the news the other day that was kind of concerning. I was watching Bloomberg, and they were talking to Jerome Powell, and they were asking Jerome Powell. It was a long interview they were having with Jerome Powell, and they said, "Hey, what is Joe Biden talking about with you when he has meetings with you, and they're having meetings about the federal funds rate, and what is his input on what you're doing here to try to curb inflation?" And Jerome Powell said, "I've never talked to Joe Biden." And so that's kind of concerning that, that they're just kind of going off on their own, and it kind of seems like they're just doing what they want there, and we don't really have anybody, standing up for us as real estate investors. I know that that was a big thing, and Trump was butting heads with him when he was in office. Love him or hate him, it's pretty much the only two options that you get, I guess, because that's what people do. They either love him to death or they hate him. But he was a real estate guy, and he was pushing Jerome all the time to keep the rates down and things, because that was helping his values on his properties. So just throwing that out there, just it's a little concerning when I heard that we have all this going on and things that are affecting the finances of people so much. As I mean, most people, their biggest asset is their home, and they're losing value every day now in their homes because of the interest rates going up, and we don't have anybody in leadership that's talking to these guys that are raising the rates right now. So take that for how you want, but that was just something that I saw. And you can kind of figure that when whatever happens here in the election cycle, when we have a change of commanders, the next one might end up being another real estate guy, and he's going to fight to get the rates lower, and going to fight to help real estate values because it benefits him and it benefits his people. So if we're talking about when the Fed's going to lower rates, it might be 2 years from now when that happens. So just kind of throwing that out there. I mean, it could happen in 6 months. It could happen. I mean, it could happen over the next year. I just don't know, but that's just kind of was my thinking, and just kind of playing out in my head a little bit that might be the way it happens. I don't know. But where are the current rates? Fed rate, I said, 5 to 5.25. It was unchanged today. SOFR, or the secured overnight financing rate, 5.06. A lot of our bridge lenders will lend off of this rate. If we talk to a bridge guy, a lot of times they're going to say we're going to be 4 points over the Fed rate, or we're going to be 5 points over SOFR, and they won't lock in a rate today because the rates are changing so much. And they'll say, hey, we're going to be this much over SOFR at closing. And that's about as much as we get from them on, when the rates are going to lock in. The 10-year Treasury is a number that's real important on our end, because that's what our agency debt is based off of. So Freddie and Fannie, you look at that 10-year Treasury, and you can pretty much figure that you're going to be 2 to 2.5 points higher than the 10-year Treasury. When you're looking at your rates to underwrite deals. So right now you're going to be, 5.8 to, 6.75 probably is where your rates are coming in right now with, through Freddie and Fannie. Rates are up. What does that mean? Some of you guys already know, but, if 12 months ago, if you could afford $1 million mortgage, and that was your max mortgage you could afford, now we might be at 500,000 or 600,000 on that same mortgage. So, the houses that people were shopping for, that were your, kind of your starter homes, or the homes that sell the quickest, at that 200,000 to 300,000 range. Now those same people that were just barely affording that house aren't able to afford them no more. So the houses are going to sit on the market longer. You know, you're gonna end up paying double now monthly on those same houses. So on those houses, and when you're looking at apartment buildings or commercial buildings, you know, your debt service is going to be messed up, because instead of 100,000 a year on debt, you're going to be 175,000 a year. So you're going to get less proceeds when you go to finance something. What are my lenders saying and doing? You know, I'll talk about the agency lenders on the next page. But we have lenders that are really pushing to, you know, kind of take market share. I read an article in the Scotsman's Guide, you know, this week. The Scotsman's Guide is the mortgage brokers, you know, kind of trade magazine. Said that 40 to 50% of all mortgage brokers are going to leave the business this year, because, you know, they're not making any money right now. There's very few deals getting done, and you know, like I said here on the page, we are in a stagnant market as far as the debt right now. So the mortgage brokers, a lot of people are buying on assumable debt, you know, things like that. And mortgage brokers don't get paid on assumable debt. So, you know, a lot of the deals that are happening, you know, there's not even a mortgage broker getting paid. So, you know, and I'm saying all this doesn't mean that, you know, it's all doom and gloom. But, you know, as things go down, it creates opportunities. So, in our business, we're taking it as an opportunity to take market share away from people that aren't able to afford to stay in business right now. So, and you guys as investors, you know, we're investors as well. You know, as people are not able to buy and people are needing to sell, you know, you can be the person that finds creative ways to get in these deals. So. This is something I've had up on the screen ever since February. The 1st of February, Freddie and Fannie came out and they said that they are going to lean in on deals that are 5 to 50 units. They have big goals. They want to fund 18,000 units in that space each, and roughly $2.5 billion each on 5 to 50 unit properties. So just fair warning, loan amounts on these deals need to be over $1 million. So if you're funding a $5 million deal, you know, you're going to need you can't find too many 5-unit deals in the Midwest here where we're at, you know, in that million range. But you know, you go to the right markets. If you're in Arizona, probably parts of Arizona, Florida, you know, New York, Chicago, places where property values are a little higher. San Francisco, you're gonna find 5 units that kind of meet that $1 million mark on the funding amount. But yeah, they're looking to fund those types of units and to be a resource for smaller investors. So they are mission driven. They were put in place by Congress, and they're looking to fund deals. So our main topic is what was it? Hey, babe, jump in here. What was that main topic? The name of it again?
What is needed to fund your multifamily deal? Sorry, I should have put it on there.
So what is needed to fund your multifamily deal? You know, first thing we need to do, qualifying the property. So this is really important. I have people that call me quite a bit, and they bring deals to me. And you know, these deals that they bring to me, a lot of times I see deals that come to me, and the properties are not financeable. And I'll kind of explain that through this page here on a financeable property and what lenders are looking for. I will tell you right now, in this market, if it is a hotel or a motel and it's not flagged as far as like a franchise, if it's not a franchise hotel like a Hilton or a, Days Inn or whatever, Holiday Inn Express or any of them, you're not going to be able to find financing for it. It just, I've got some really qualified people right now that own quite a few little boutique hotels that we've been working, trying to find funding for. And we're even trying to find funding for them through SBA programs. And SBA programs are another government program. We cannot find funding for these deals right now. And the banks just don't like them. So there are properties out there that are just not, they don't qualify for financing for one reason or another. Another product that I'll say to stay away from is anything that has cannabis or marijuana shops or anything to do. If you have a strip center and there is anything in there to do with marijuana, even if it's legal in the area, that takes 90% of all lenders and just kicks them to the curb because they're not going to lend on it. Now, there are some lenders that do, and they specialize in it. But it's a really tough thing to fund. And kind of even on the other hand of that, lenders don't like churches as well. So they don't like the one side or the other side. So I see your hand up there.
Yeah, Kevin is asking a question. He was asking, which agency were you referring to just then?
Oh, agency. When I'm talking about agency debt, I'm talking about Freddie and Fannie. Fannie Mae and Freddie Mac.
Okay, good.
So, all right. So qualifying the property, locations, needs to be safe. You can fund deals in the bad neighborhoods, but once again, you take a lot of lenders out of the market. There's just a lot of lenders that won't lend in places that have a lot of crime. And Mary, go ahead.
Hi, everyone. Yeah, my question is about the boutique hotels. Why they wouldn't be funded? Is it because of their past history? Is it because they are mom and pop shops kind of thing? Like there's no potential for them? Or is there no, like, let's say, solid plan for those entities? What's the reason?
Well,
Because I know a couple of deals that are going here for a couple of investors I met, and then their deals are doing well.
are they? Okay. Yeah, I mean,
Yeah.
there's a lot of them. I mean, the people that I'm trying to find funding for, the hotels are making money.
Yeah.
But in this market right now, I mean, everybody's
Mhm.
expecting a recession here coming in the last quarter of this year.
Okay.
And I mean, that's one of the first expenses that people cut,
Travel.
is traveling. And, that's a big reason. And then when they're looking at mom and pop shops, chances are a lot of them don't have the bankroll to stay open if
Yeah,
they start losing business.
okay.
You get a nice newer hotel like Holiday Inn Express or I can't think of all the names, but one of these hotels, those places have all the systems in place. They have advertising. They have all the things needed, and that's a lot safer bet.
Okay.
But even then, I mean, they're doing lower leverage on those deals right now too. But as far as the mom and pops, I mean, lenders right now, a lot of them are kind of let's lend on the sure things, and those are just not sure things.
I mean, would you hard money lend those entities then, or versus being an LP in them?
Well, you might as a if you have the cash to do it, it might be a good opportunity. And really, if they can't find funding anywhere else, you could probably charge them 15 or 16% on a deal. And just become the bank and say, hey, I'll give you the 2 million, and but it's going to cost you 12. It's going to cost you 16%, or
Okay.
You know, and that might be a good way to do it because,
And how would you like legally go about that since it's a small thing? You know what I mean? Like if you
yeah, I would
hard
get a
learn
law,
just small things like
yeah,
that.
I would get a lawyer involved and I
Okay,
would close the financing through a title company.
okay.
Yeah,
Good to know.
I would get a title company involved and I would make sure that your name is on there as a lien holder, the
Mm,
first lien holder at the courthouse and all that. So you could, if, you know, bad things happen, you can take it over, you know.
sure that, okay. That would be a real estate lawyer to consult with.
Yes.
Will
And
do. Okay,
yep.
thank you. Thank
Okay,
you
yeah,
so
no
much.
problem. So location needs to be safe. You know, look at who your tenant base is. You know, where do they make their money? Who are the employers in the area? Those are things that the lenders are going to look at. They want to know that this isn't a town, like if they're looking at a small town, that town doesn't have one warehouse or doesn't have one business that employs the whole town. You know, there's a lot of little towns out there that have one main employer that half the people in the town work for. And if that employer goes under, you know, the tenants don't have money to pay their rent. So I've had deals that don't go through because they've done audits of the tenant base and the you know, tenant audits and they don't like what they see as far as employment opportunities in the area. You know, so and that one big one that the agencies you know, the way they look at them is military bases. You know, well, I've got a few deals coming to mind now, but military bases, the agencies will not lend on properties with more than 40% military. So if you're you know, Jackson, North Carolina is a big military town. Jacksonville, North Carolina. There's one out in Oklahoma that we looked at recently and couldn't get done because it was like 70% military. You know, even the military, you know, being government run and all that, you know, you would think, oh, well, that's really stable for the tenant base. But, you know, if that military base decides, or, you know, someone in Congress or something decides that they want to switch that group of people that are working at that base to another base, all the tenants are gone. You know, so they want to know that there's more avenues than just that one employer. I know there's little towns in Texas where you know, there's complexes that are nothing but oil workers. You know, and you know, oil, you know, we stop the oil production in that little town or whatever, and the apartment complex becomes a ghost town. So who are the employers? We need multiple employers, high populations, and also to be able to qualify for the agency debt. And I'll tell you guys how important agency debt is right now. A lot of the small banks and things, they don't have money to lend out. Or they're not lending out on these you know, apartment deals. And so we go to the agencies, Freddie and Fannie, and our rates are going to be about the best that you can get. They're going to be in the 6% range right now. If the property does not qualify for agency debt, our next step, we're in the, you know, upper 7s to 8% range on debt. So when we're talking about you know, agency debt and what the qualifications are, the reason that we're telling you guys a lot of these things is because, you know, you want properties that are going to qualify for the good debt. So you know, 90% or better in your occupancy is very important. You know, and also the property itself is going to need to go to a physical needs assessment, all the third-party reports, appraisals, engineering, you know, the legal reports, all that kind of stuff. So the qualifying for properties, you know, that's where we're at. So qualifying the borrower. Not everybody knows these things I'm going to talk about, but some of you guys do. You know, if you find a good deal, you know, when you go out to the bank, to us, to whoever you go to get your debt, you're going to have experience, or have a partner that has experience, a KP or GP partner that can sign on the debt for you. You know, net worth requirements are equal to or greater than the loan amount. So if you're looking at a $12 million deal, you're looking to get $8 million in debt. The net worth of your team together combined, or one individual, needs to be 8 million or better. You know, if you listen to Grant Cardone a lot of the time, and Robert Kiyosaki and all these guys, they tell you, oh, I buy deals with no credit. I don't need credit. You don't need credit, all these things. The people on the GP team, you need to have a credit score of 660 or better. You know, the agency debt, you know, they're going to look at your credit score. You know, if you get a 20 to $30 million net worth, $100 million net worth, and you can show a financial statement showing that, your credit score is not going to matter. But if you're going and you're looking to get a $15 million loan, and your you know, your net worth is 16 million, they're going to look at your credit score. All right. So also you need to be able to get the cash, get the deal closed, you know, cash to get the deal closed, or be on the way to raising it. So when you come to us, I have lenders that won't give me a quote unless I can show that half the deal has been funded already, as far as the down payment and things. You know, I don't deal with them as much because I like to be accommodating to borrowers, and I know that people are trying to raise money and things, and I want to be able to work the deal for them. But a lot of lenders are that way. You know, and we've worked on quite a few deals where we're working on getting a closing done, and then the people can't raise money for it. So that is an issue. And I would say, hey, start raising money now, start talking to people, start getting those things in line. You know, and also qualifying the borrower and raising the money 2 to 6 months in reserves after your closing is done. So, and we are 10 till. I'm going to hurry up through this other part so we can get to questions. And what can you do today to get yourself ready to be able to buy a deal and to be a part of a GP team? Make sure your credit is in order. Work on paying down debt, you know, getting your credit score up. Work on your PFS, your personal financial statement. Even if you don't have much to put on there now, as far as net worth and things, get the template out and start filling it out, and then look at it periodically, and just keep on working on putting assets in the column and getting rid of debts, and getting, you know, and just getting assets and working on growing it, and always looking at it, because if you're not looking at it, you're not going to grow it. And then work on your SREO, schedule of real estate owned. Those are things that lenders are going to ask from you or your GP or your KP, depending on how your deal is being structured. Something else you can do to be getting ready is get your bio together. Mark, you were talking about being part of the multifamily mindset. Put that in your bio, the education that you have there, and things, if you've invested money in deals, just all those, anything you've done, if you've done a flip, if you've done wholesaling, put those deals in there as your bio. Talk about those things. So, you know, work on raising capital or just making more money personally. And we're getting ready to come out ourselves. We're getting ready to come out with a referral program for our company. You know, and I'll tell you guys, when we close a deal, if the deal is over $1 million, we get 1%. Okay. And sometimes those can be significant checks. Under $1 million, we charge 2 points or 2%. Okay, if you become a referral partner of ours, we will pay out a percentage of those things. When you bring deals to us that close, we'll pay a percentage to you guys. So if you guys, anybody on here is interested in learning more or wants to become a referral partner, reach out to me and send me an email by the end of the weekend, because this is something that we're working on, and we're going to start. Right now we've got a referral partner and we've got a deal working with him, and he stands to make about 19,000 on this deal. As a referral partner, all he did was bring me the customer, and we're getting ready to close the deal with him, and he'll make a check of a little over $19,000 on this deal. So the checks can be significant. Just a way to make more money. You guys are all networking with real estate investors, and we're looking to do more deals and to look at more deals. So, and we'd love you to bring them to us, and we'd love to pay your referral fees. So.
Did you mention the part about not if you bring your deal?
Yeah. We can't pay you a referral fee on your own deal, but if you bring us deals from other people, if you're a part of the deal or at all, we can't pay you a referral on that, but we can pay you referrals on anything else. So needed for a quote. If you're bringing a quote, you need a quote from us. T12s, rent rolls, OM if you have it, a summary of what you plan to do with the property, or a pro forma. And we don't need these right away, but we'll need them if we start getting more serious about the deal. Schedule of real estate owned and PFS of your KP, or if you're the KP, that too. And question and answer time. Fire
So
away
we got a couple
questions.
of questions. Sorry, we had a couple of questions in the. I'm always talking over you. I'm sorry. We had a couple of questions in the chat. Tiffany, if you want to jump up here and ask your question, that would be good. It's a great question.
Yeah, I was just wondering if, Norfolk or Hampton Roads area was included in those cities that, is 40% military, because we do have a lot of military branches over here. And I wasn't sure if you knew right off top or have dealt with someone else, with the lending issue, had issues with lending basically.
Yeah, when you're going through the agencies, they're really strict on the no more than 40% of the tenant base can be military.
Gotcha.
So, you said Norfolk?
Yeah, Norfolk, Virginia. There's like Chesapeake, Portsmouth.
Yeah, there's Navy, Air Force, everything over there.
All
Right?
of it. Yeah.
I mean, that might be one that we could get an exception on.
Mm.
Because if one unit moves out, you've got, that whole area is military. So it's not like a place like, what is it, Fort Sill, Oklahoma, where it's just artillery. And if they move that artillery unit out of there, there's nobody left. That seems to be the biggest issue in that area where you're at. There's I can't imagine enough military moving out of there to make a difference,
Yeah, it's really big.
Yeah, so if you have deals over there, I will say agency debt, Freddie and Fannie, are very fluid. So if there is something that doesn't make sense, or like you're talking here, like their military criteria doesn't make sense in that area, because there's a lot of different employment opportunities through the military there.
Right.
We could probably get an exception on that.
Okay. Sounds good. Thank you so much.
Yeah. Was there another one in the chat?
There is another one. Terry said, do we have a PFS template that we can share?
I don't.
I don't think we do, no. If anybody has one, Aldo, I don't know if you have one that you can share. Go ahead, Aldo.
I actually do have one. Why don't I try to just put it in the messenger group? How about that?
Yeah.
Go look at that, a blank one, and stick it in there. See if I can find it.
on the Facebook group?
Yes.
Yeah.
Yes.
Perfect.
I don't know where it is right now. I have to look for it.
Yeah.
But yeah, quick question. Are you guys seeing many people using debt, bridge debt on unstabilized assets in this current environment to bring them up to agency standards?
We've seen people trying to do it. I haven't seen any close. I haven't seen any close, and that doesn't mean, I mean, some of our lenders have advertised some that have closed recently, but us personally, we haven't closed any.
Mhm.
It's got to be a sure deal.
Yeah.
If you're doing any type of a big thing when you're looking at value add and the bridge debt and bringing things up and doing the rehab and all that kind of stuff. The biggest thing they're looking at right now in that stuff is experience.
Sure.
They're like, in this market, they're not wanting to try anything new with somebody new. So if it's somebody that has done a few of them before, and has had experience and had success with it, they're gonna jump right in. I've seen some here recently that I thought were sure deals. And the lenders just didn't like it for one reason or another, or these people maybe had 80, were looking for 80% leverage, and the lender comes back and says we'll give you 50. They're playing it safe right now.
Sure.
I mean, when the lenders are looking at deals, they're saying, hey, if we lend on this deal, bridge debt, and we lend for 2 years, worst case scenario is 2 years from now. A worst case scenario is we're at 8 or 9% on agency debt, and are we going to be able to finance that out of our name,
Sure.
off our paper? And
Mhm.
and I mean, who would have thought last year that we'd be in this situation as far as with the rates and everything else? So, when you look at it and you say, oh man, that's crazy to think, 8 or 9%, but it's been there before. So,
Yeah.
I mean, I don't think we'll get there personally. I think, we might be real close to the top now and start kind of coasting down the hill again, but who knows?
Okay. That's
Yeah.
what.
So
what kind of deals are closing out there right now, agency wise? I mean, like agency versus, recourse versus non-recourse.
yeah, I mean, recourse deals are closing. I mean, I haven't seen any non-recourse stuff closing. Everything's recourse.
Really? At that percent? At the current rates?
Oh yeah. Yeah. Everything's been recourse that we've been seeing.
Wow.
But it's, there's not much closing. I mean, there's not many deals trading right now. So
Sure. That's crazy, man. Insane. All right.
So it's the market we're in, and it's going to get better. It's going to change up at some point, but
Thought I heard him say that no rate cuts for 2 years.
oh, Jerome Powell,
Yeah.
I didn't hear those exact words. But I was like, had a lot. Well, I told you guys that we have a full house, so I
Sure.
was listening to it and couldn't hear everything, but I didn't hear that.
I
But
could be wrong.
I wouldn't be surprised.
That was the sentiment. That was kind of the sentiment.
Yeah. Yeah. And I mean, if that's the case, we're going to get into a kind of a new normal of this is the rates now. And, the values and things are going to drop to meet them,
Sure.
because in this situation where we're at right now, rates are high, in comparison to what we were a year ago, 2 years ago. And we also have, because of inflation that they're trying to curb, insurance is going up. When a property gets hurt and you need an insurance claim, it's costing the insurance company more to get the claim and to bring the property back. So insurance rates are going up because construction costs is going up. And then taxes are going up as well.
Sure.
You know, because I mean, once again, inflation, these little towns and the cities and states and everywhere else is, you know, they're all, their cost of doing business and keeping the town up and running and all that's going up too. So, and then when the taxes, everything else is going up, it's killing NOIs.
Yeah.
You know, the NOIs are going down, and so that's gonna hurt the values of properties.
Well, sellers don't seem to realize that right now, apparently, but
Yeah, and some are just gonna have to kind of get smacked around a little bit to realize it. You know, they're gonna get smacked around by the market before they have to come to that realization. And you know, people are thinking, oh well, you know, it might happen this summer, it might happen. You know, this is a slow moving process of the market changing. You know, to think that these sellers and the mindset of these sellers and everything else is going to change, you know, in a couple months' time. I mean, you know, some of these people, some of these sellers might have $1 million in the bank and they're losing, you know, 10 or 20,000 a month on their deals they have. And some of them are going to run out of money trying to keep these deals alive because they think that the market's going to change around. You know, and they're going to run out of their money, and then they're going to be hurting, and they're going to be having to sell at a loss. And it's a slow moving process, and it's not going to happen overnight, and it might not happen over the next year. It might be a couple year process, but there are going to be deals coming on the market. I mean, that the two things are going to happen: either there's going to be people hurting, and deals are going to be coming on the market at big discounts, or the Fed's going to start lowering rates and property values are going to shoot up again. You know, that, I mean, that's the two things that's really the only two options I see happening, you know. And it might be kind of a mix of both at the same time, or one starts happening and then the other takes over. But
well, thanks for that, man. I've taken enough of your time. Appreciate
oh,
it.
you're good. You're good. Mary, how are you?
I'm doing well. I have a question about the operation costs, like the running costs of like the multifamily, which they are the ones that are variable, like the insurance fees, right? We're talking about insurance fees. Is there a cap to that? I mean, can that be controlled? Can that be, you know what I mean? I mean, or insurance companies can just increase however they want.
Yeah.
Because that can affect dramatically the returns at the end of the day.
Well, the state of Florida is one of the worst right now. And they're actually, there's people in their state house and things working on legislation for the insurance, because of insurance right now. They're trying to figure it out because there's a lot of insurers that are just dropping out of the whole state of Florida right now altogether.
Right, because
There's
of
people,
everything.
yeah, there's people that have houses, apartments and everything else on the water in different parts of Florida that cannot find insurance for it anywhere. They just can't find it at all. And, you know, but like, to get to your question, there really isn't anything out there that I know of. You know, I'm not an insurance agent, but there's really not anything that I know of that, that keeps an insurance company from charging you what they want to charge you. You know, and it's all about, you know, if the roof blows off, it costs X, and because it costs X, they've got to charge X and Y, you know, and it's the, you know, it's all inflation driven. And then we've had, you know, a few storms last year that, you know, they judge these storms based on the dollar amount, but the dollar amount goes up with the cost of living and the cost of construction and things as well. So it's hard to judge that if these storms are getting more expensive or if things in general are getting more expensive, you know. But yeah, as far as I know, there's not really any legislation that caps them on what they can charge. And I might be wrong on my amounts, but I know that they were talking, I'm part of Grant Cardone's real estate club. They
Yeah.
were talking about, you know, that 2 years ago on their apartments that Cardone Capital and them owned, they were paying like $700 a unit per year for insurance in Florida. And then this year they're at 2,400 a unit.
Wow.
So imagine having, 10 or 12 or 15,000 units. And now you're paying an extra, what, $1,800 or whatever it is. Extra.
Well, I mean, it only makes sense
Per
that he
unit.
creates his own insurance company on that deal, right?
Yeah.
Because it's like third, is it third? It's third of the total income on the one unit. It's
Yeah.
about 30%. So might as well just create my own insurance company to.
Yeah. And I'm sure that he would be doing it if it was something that was cost effective for him.
Oh, well, he's very happy with 1.98, literally, because
Yeah.
he just figures if I don't make money on this deal, I will make money on the other deal, and overall, all the deals are gonna make money. This is how he thinks,
Yeah.
and it's a very good way to be able to go to bed. I mean, if you think like that, then you'll be able to go to bed.
Yeah.
Yeah,
Yeah. But at the same time, it's hurting the values of those properties,
absolutely.
It's when you take 100 unit property, $1,800 per unit more in insurance. I mean, I'm not good with math in my head, but that's a lot off your NOI, So
And I contacted them once to figure like if I want to be LP with them, and they gave me a really wide range of investment between 4% all the way to 8%, and then so there wasn't really very solid number to go off, and it has to do with this variables,
Yeah.
yeah.
Yeah, and a lot of people have made money with him as LPs, and it might be a good way to start. Invest 20 or 50 or 100 with him. 10,000, I think you can do as low as 5,000 with him. And then
Right.
people that are new, it might be a good way to, you can kind of see how they report,
You know what?
how
You're
they
very
deal with
right.
you as an investor, and it'd be a good way to learn.
That is so very true. Thank you for pointing that out. Yes, very true.
Yep, for sure. And if anybody needs any referrals, like people to call, at Cardone Capital, I know a lot of the guys there. So if you guys need a contact there, just let me know and I can help you out with that.
Okay, sounds great.
You got time for one more? We gotta
Yeah,
get.
one more. Go ahead, Mark.
Hi, first, thank you. I think you guys did a great job. This is really informative, especially for us being new. So, with everything that you said that is being stagnant, what should we focus on who are new to the industry to be prepared for when the market actually picks up?
I would say looking at deals.
Look into deals. Okay.
It's like repetition, man. If you want to get good at push-ups, you do more push-ups. If you want to get good at looking at deals, you look at more deals.
Look into deals and like do the
Yeah.
underwriting and do the whole process.
That's it. Yeah, and talk to brokers. Learn what the brokers are talking about. Get into as many conversations as you can with people that have bought deals. Just the whole 9 yards. Looking at deals, and I've got a 7th grader that is really wanting to become a really good basketball player, and so every day I'm like, did you shoot 400 shots a day? Did you shoot 500 shots a day? Because
Yeah.
if you want to get good at something, you got to take a lot of shots. So.
Okay. Thank you.
Yeah. So.
All right.
All right.
Then go to the
Well, I
next-
appreciate everybody being on here. So Q&A needed for a quote. Here we go. Next topic is, what are lenders looking for in today's market? And that'll be June 28th. And then you guys join the community, be a part of the community. Sundays through Wednesdays, every night at 8 o'clock. And then here's our contact info one last time. And you guys reach out, if you want to become a referral partner, we have a contract and we'll talk about fees that we pay out. And, be a good way for you to earn some extra money to be able to invest in some deals. And then, if any of you guys are looking to invest with anybody like Cardone Capital or whatever as well, give us a call. We know the people down there. So. All right, y'all. Have a good rest of the week and a great weekend.